So, yeah, we are going to discuss about the future of DeFi. We'll start the panel by maybe just do a round of introduction. So if you guys can introduce myself. I mean, I'm going to start introducing myself. I'm Fred. I'm working at Stake Capital Group. We are a prop shop. We do three main things. The first one is running a venture studio. Second one, an investment fund, as well as having a hedge fund. Myself, I'm mainly working on the investment team there, so taking care about every single research and due diligence of early stage projects in the space. And yeah, maybe we can just introduce, starting maybe from Ale. Do you want to go?
Cool. I'm Alessandro from Brahma. So what we focus on is execution in DeFi. So imagine anything that has to do with a transaction in DeFi, providing liquidity, adding operators in your team to do things in DeFi. And we built all of this on top of smart contract wallet, specifically safe. And our history as a team is in building integration with DeFi protocols and automating transactions over time, whatever the scope. So that's us.
Hi, I'm Fabio from ICONIUM. ICONIUM is the first and so far I think almost the only VC firm in Italy. We have been active since 2018, made 8 investments throughout all the spectrum of blockchain, a lot of investments in DeFi. We have been really active since the beginning of DeFi summer, and we are actually very operational in terms of the support to the projects we invest in. We provide liquidity, we help in governance, tokenomics, and all things that projects can need. Thank you.
Hey everyone, John Nahnas, VP, Global Head of BD at Alva Labs, supporting the growth of Avalanche. I oversee all of the verticals of the BD team, so from the most traditional stuff of institutional capital markets, enterprise, exchanges, wallets, custodians, NFTs, gaming, and of course, DeFi, which is the first vertical that we really kicked off on when we launched mainnet a few years ago, and are actively always working on finding new and innovative applications and use cases. So it's good to be here.
Ben Sherman. I work with Horizon Labs. We are the largest ecosystem builder on Horizon. We have EVM launching here shortly. I work on the BD team, very focused on the DeFi ecosystem.
For those who can't tell, I work at Berachain, MVP. I'm on the ecosystem growth team, helping founders solve the problem of liquidity. Really quickly, Berachain is an EVM layer 1 that is DeFi focused, built on the Cosmos SDK to help systematically build liquidity for our core applications.
Cool. Thank you, guys. Yeah, as a first question, general question, I would ask you if you can, in 2 sentences, kind of give a definition of DeFi. What's DeFi for you? Maybe that would be cool to just give an introduction about the panel.
Yeah, sure. I believe financial functions that end up on a trustless ledger is what DeFi means to me.
I mean, yeah, the base idea is decentralized finance, right? Whether that started with Bitcoin, Ethereum, or MakerDAO, we're here today, so.
I mean, the way we look at it is, well, okay, 2 sentences. So peer-to-peer or entity-to-person or point-to-point finance without any needed intermediaries to facilitate the transactions.
The more we go and the more difficult it is, so I guess the most difficult will be for you because everybody said.
And then Fred.
Yeah, and then Fred. But basically, yeah, the decentralized finance to us means decentralized, trustless, no intermediaries, and then it should also mean protected by and driven by software, basically.
I guess you all said everything, but trustless probably means that anybody can access and deploy a contract, a protocol on-chain at any point in time. It cannot be stopped. That should be the ethos. So unfortunately, it comes with a lot of for example, bad scam tokens or things like that being deployed. But the fact that it's literally permissionless, wherever you have a RPC connection and some ETH or whatever base currency to pay for the deployment on a virtual machine, which Ethereum is, that's actually permissionless. So that's pretty cool. That's unique to crypto and blockchains.
Cool. Thanks, guys. Yeah, Ben, I'm gonna start from you and ask you about Horizon Labs. So you mentioned before that you guys are launching an EVM, and I'm just wondering what's your DeFi strategy there, and what's the process in gathering DeFi builders?
Yeah, I mean, launching a DeFi ecosystem, it takes time. We are launching an EVM here coming up later this month. Super excited for that to happen. But so ideally, I mean, what do we consider like base DeFi applications? It's your swaps, your AMMs probably. Is it even bridges at this point? Like, do we need standalone bridges with cross-chain communication that we were getting? In addition to that, your borrow lens, RWAs are a hot topic right now. So it's really just determining what your base DeFi stack needs to be, and then making sure you have the actual infrastructure to support those applications. So with that, your oracles, your data indexers, your cross-chain communication, and then determining if they have the actual functionality like these apps need. And that's probably why we're seeing app chains becoming what they are, is because it's much easier to build a chain for a specific vertical or a specific protocol when you know what that application needs. So yeah, it's starting from the ground, determining what your base is, determining the functionality needed, and then actually onboarding those protocols. What are those protocols looking? And initially, with like the first wave of change and the first movers, I feel like it was very much, here's your grant money, like come build on our chain. It's been moving away from that. Something that's super important to projects. We've given out very little grant money to this point, mainly infrastructure if we are giving out grant money. We've gone out, we have found asset providers, and we're pairing them with our protocols that are coming on board. So that's the most important thing with any of these, in my opinion, with any of these protocol launchings, make sure they have TVL from day one. You can't function without TVL. It's a process if you don't have it. So yeah, really making sure once they're onboarded and then like continuing support. So again, a lot of these first movers don't offer a whole lot of tech support. We hear that often with protocols. So making sure that we're offering that support and continuing that support. I think that's really how you start that DeFi ecosystem. And then from there, it's kind of what we're going to get into the future. How do you make sure you have the support for these protocols that don't exist today?
Thanks, man. Yeah, another question for you, John. So I know, like, or at least it seems from an external perspective that Avalanche is looking a lot into institutionalizing itself and like providing like institutions like toolings in order to migrate their backend on chain. So I'm just wondering, like, what are the main use cases you guys are focusing on in order to serve institutionals?
Yeah, so I mean, I think the most important thing, right, and something that I mentioned from the beginning is when we looked at where we could make the biggest impact and prove out the tech, it was first with DeFi, of course, right? That's the most natural place to start if you're a blockchain, right? So that's where the users are, that's where everything exists, it proves out the TAM. That's where the real innovation is happening, right? A lot of other chains try to do an institutional or an enterprise strategy, and they go after that first. They focus only on that, like that's their niche. And what we've seen is that doesn't work. It doesn't work because, one, institutions aren't going to want to use new technology that hasn't been proven. Two, they need a catalyst, right? They need something to show them what's possible and what innovation is possible. And that's the beauty of DeFi, right? Despite all the issues that come along the way, DeFi is really the innovation in financial markets or in financial tools that forces the incumbents to say, okay, we need to take this technology seriously. This is what's possible. This is how we need to stop being as centralized or be more transparent or allow for more innovative tools for users. So our focus, at least on this specific area and with institutions, is bridging that divide, right? So when I mentioned the 6 verticals that we talk about, institutional capital markets, i.e. traditional finance is on one end and DeFi is on the other, right? But at their extremes, they do connect. There is overlap. So the way we're focusing on it, and we do this through the use of subnets, right? Which are our own either specific app chains or sovereign L1s that are connected to the broader Avalanche ecosystem. Earlier this morning, our head of DeFi, Luigi, was mentioning this, right? There's tens of trillions of dollars of assets in the world, and there's about $38 billion of capital in DeFi right now. And when we talk about RWAs or real-world assets, that's a crypto-native term for things in that space. But we like to look at it as kind of on-chain finance, right, or on-chain assets. And there's tons of off-chain assets, right? If we really want this technology to go to the next step, then we need to talk about FX and multiple fiat currencies. We need to talk about real estate. We need to talk about all the value that we own and that we have in our natural, daily, traditional, I guess you can use that word, traditional lives, that doesn't touch finance on chain, that doesn't touch DeFi, that isn't used. It's as if we have two parallel financial lives, right? On chain and then the banks and everything else. Well, at some point, if we want this adoption that we're looking for, we're going to need to find the bridge. Now, does that mean it's going to be as amazing and decentralized and trustless as DeFi? No. But that world has rules, and there will be rules at some point that are not coming. So we need to find a bridge to connect those two, right? The equity of your home, the equity of a car you own, gold, etc., equities. Why can't we use that as collateral? Why shouldn't we be using that as collateral? But to do so, you need to have a specific system in place, and we're using subnets to do that, with the hope that the system will continue to evolve and grow. We're working with some of the top asset managers on tokenization and other providers in the space to build compliant products that can start to loosen into the broader DeFi ecosystem and utilize some of the original primitives that emerged in DeFi, right? So we have a program called the Evergreen program and a subnet called Spruce. It's in testnet right now with some of the top asset managers. And within that, there are AMMs and borrow-lend protocols that are traditional cornerstones of DeFi that are being used by global asset managers and banks. So they're taking this technology and they're learning from this technology, and whatever it may be. Even this morning, Trader Joe's has liquidity book, right? Like, these are innovations happening on the financial side that we can, on the DeFi side, that we can start to use and apply to traditional financial players, and we're seeing tremendous traction along that way.
Gotcha. Thank you, John. MVP. Question for you. Kind of seems from the outside that you guys are like taking instead like a more of a consumer go-to-market, let's say, not focusing a lot of institutional. I could be proven wrong, but what I would ask you is like, so you've been working a lot on like improving tokenomics or like creating new tokenomics model on a blockchain level. I'm wondering what are like the benefits of creating those blockchain tokenomics model for DeFi users, and what makes Berachain unique to DeFi users?
Yeah, so of course, all of like the DeFi Legos that we know and we love, can be used by retail. Obviously, DEXs, lending, leverage yield farmed, RWAs. All of these themes are going to be showing up on Berachain, hopefully. And then obviously, Benjamin was talking about it, the lifeblood of every ecosystem is their TVL number. How much capital is actually going to be used in these protocols. So Berachain's unique consensus mechanism marries the market of security with liquidity, allowing those who provide liquidity to earn their portion of the chain. And that aligns incentives correctly with validators, DeFi builders, users, to ensure that there's opportunities for all of them. And so with that unique consensus mechanism, we're really excited about the new opportunities that DeFi builders have from the get-go to seed their projects with liquidity, not by making deals in the real world with whales or market makers, but rather bringing that on chain and asking validators, going direct to the source, to the chain, to give them some lifeblood. So we see Berachain as a solution to DeFi founders from the get-go, trying to seed their project with liquidity.
Gotcha. Thank you. Question for you, Fabio. So like from a VC perspective, how are you guys at the ICONIUM looking at the market? So what's the most compelling use cases that are happening in the space right now for you?
Okay. Well, I think DeFi has been very short, has been around for a very short time or period. But I think well, DEXs were EAMM has been the first and most important innovation, together with stablecoins, and we are now looking for new things that are going to disrupt the market. We were among the first ones to bet on perpetuals, decentralized perpetuals. We think that we're looking for everything that can really disrupt the traditional finance, honestly. And I agree with all that been said about bridges and everything to traditional finance. But I think real innovation first comes from disruptors. And we believe that there is a lot of potential with derivatives markets now that is going to be addressed. We're looking at the segment. Clearly, there are issues with liquidity. So if we think about the depth of liquidity that you have in Deribit, it would be very difficult for every decentralized option protocol to arrive to that level. But we think it will come, it will arrive. There is cross-chain liquidity now arriving. And this is one example of what we're looking for. But in general, we're really looking for things that are really disruptive in what there is. And then I believe we will be able in the future to sort out problems with regulation, synergies with the traditional market. But for instance, the option is a very, very specific vertical where very specific traders in traditional finance work on. And but once you get them on board on DeFi, the numbers can grow infinitely, and you can create a totally new level of liquidity also for the entire market. So this is one of the use case we believe it will happen in the next couple of years and will prove very strong.
Gotcha, thank you. Yeah, one question for you, Ale. So you guys at Brahma are working a lot in order to improve, or that's at least my perception. You guys are working a lot on how to improve accessibility and how easy it is to use DeFi applications. So I'm just wondering if you can expand on what are those pieces you guys are more focusing on.
So how many people have used a MetaMask wallet here, just to understand? Okay, almost everybody. How many actually use the smart contract wallet, like Gnosis Safe or Argent or the like? That's pretty good. Okay, that's actually pretty good. More than more than usual. So why a lot of people didn't use smart contract wallets up to now is because the experience is not as easy as it is with your MetaMask or your Rabby wallet or your mobile wallet. And that is because a lot of DeFi was built for wallets like MetaMask in mind, which are called externally owned account, which are basically dumb wallets. Like they have certain limitations that prevent them from receiving directions and programmability. You cannot set multiple owners that will sign like a multi-sig on top of a EOA, on top of a MetaMask, but you can on top of a smart contract wallet. So if you think about anything like 2FA in your Web2 world, you can build all of this sort of access control. You could build a whitelist of the contracts and the protocol you trust interacting with and avoid approving a scam transaction on a non-trusted contract, which is where most of people in DeFi, especially new people, are getting now stuck with, right? They approve a transaction on a compromised front end or on a scammy Google ad of the Curve Finance website, and literally they get their wallet drained in one transaction. So we have to improve the pre-transaction components, which means when you're about to sign something on your wallet, do you get a warning if this contract has interacted only with few addresses? Do you get a warning if a third-party provider is saying that this is not a reputable contract? And if you're onboarding on a new wallet, set multiple owners, so even if one key gets compromised, your transactions cannot be signed, essentially. So we're building a lot on top of Smart Contract Wallet to make it easy to connect to dApps, easy to add your team on it, and easy to assign policies to each of your team member. Because when you're a company and you trade on a centralized exchange, you're able to say, this is an admin in the system and this is a trader that should have lower permission than an admin. You cannot really do this on chain. When you have 5 owners of a wallet, they all are the same with the same exact permission, but that's not how real life works in enterprises and companies, or even a DAO and friends that are trading together. There has to be some controls on capital, max amount that can be transacted per day, a list of protocols that you all approve together. So basically, yeah, both pre-transaction and the general access control settings, creating sub-account, separating the risk of each of the protocols. We do all of this. And automation, which means that if you want to buy or sell an asset over time every 1 week, you shouldn't go and have to sign an approval and a swap every single week with 5 people from your team. That is also not sustainable for most of the DeFi interactions, which required a lot of clicks. So yeah, we're cutting some of the time there.
No, thank you so much. So yeah, now we start like a moment in which we're gonna kind of open ask open-end questions, like everyone can feel free to basically jump in. Would be great if everyone can contribute and give their opinion. So with Ale, we basically discuss about accessibility. That's probably one of the biggest challenge like DeFi is experiencing now. I'm kind of wondering what you guys thoughts think the other challenges are, and what are the missing pieces in order to, let DeFi go mainstream. Is it a lack of scalability? Is it like a lack of product market fit? Is it like a lack of security? Kind of both combined. Maybe we can start from you, MVP.
Yeah, so when building out an ecosystem, I like to ask founders, can my mom use it? And we like to say it's the mom test, right? So a lot of the account abstraction stuff that has, Ali was talking about, are very exciting. If you can log into a DeFi application and the password to your computer, generates then your wallet, and you can use it knowing that you don't have to think about the 12 words that everyone has written down in a safe somewhere, but you could just remember your computer password. So some of that stuff is really exciting on that front. And then you talked about scalability. One is with users, and the account abstraction does that. But another one is what I like to talk about is liquidity and size, and being able to actually have some of these institutions put trades on that they need without having massive slippage, and people using the blockchain, how they the intent that they have, being able to actually get it out of the chain is going to be a liquidity issue at some point with DeFi. So again, with Berachain and the consensus mechanism, being able to have the pool of liquidity be kind of securing the chain and being there for everyone to draw on is kind of helping some with the scalability of liquidity for DeFi founders as well.
Yeah, agree with all that, obviously. I think figuring out how to be compliant, and the first step of that is regulation, determining how these protocols can be compliant. And obviously that changes all the time. And quite often remaining anonymous and using DeFi goes head to head with that. It creates problems. Does that really have to be the case though? With the ZK improvements that we're having, and with all the ZK ID products that are coming out, I think we're quickly getting to the point where you can be regulatory compliant and your users are getting to the point where they can share only the needed information to make that happen. I think once we get over that hurdle, because it's already getting kind of bad, it's only going to get worse. So the sooner we can figure that out would be the better.
I would say, I think what people that are crypto native have failed to do is build simple products. What I mean by that is, I feel like devs and people in crypto, especially in DeFi, like to see how exotic and creative they can get by building primitives on chain, ranging from derivatives to perps to a million different things that any average person would not do on a daily basis or probably ever in their lives.
So are we really solving problems for people, or are we just recreating a traditional financial system in a decentralized way? I'm not saying that that's not cool. That's fantastic, right? I just spoke about that earlier, that it drives innovation and it forces the incumbents to move forward. But something that's typical, and we see this, is crypto people build crypto products for crypto users. And if we keep going round and round in the same circles with the same user base, it just keeps getting smaller during bear markets, and then it'll get bigger, and people get burned out, and they leave, and they eventually come back. So there's nothing really creative there, right? There's no problems being solved on mass scale to bring people in. So, you know, going back to the mom test, like, we need to start at a simple level. First of all, forget about the chains, right? It's hard to say that at an ETH event, or for me, being with Avalanche or anything else. Like, people are always fixated on what chain it is, and and this thing, you know, belongs here, or this is on the, and nobody cares, right? Like, all these things just create a more negative kind of image of this industry for people, and make it work, and make them more worried about kind of the credibility. Start simple, right? Like, so something that we're focusing on tremendously now is the FX narrative, right? Nobody has yet built a very accessible FX system. And what I mean by FX is, you know, you have your dollar stable coins, now we have Euro C, and Avalanche recently we added Swiss francs. We need to have as many currencies on chain as possible. And then those currencies can eventually lead to a easy to use front end wallet, right? Something where I send you, my default currency of sending is dollars, and your default currency of receiving is euros. I send you the dollars, you receive the euros, right? Like, everyone talks about how remittances is going to be the amazing thing for crypto, and yet it's been 4 or 5 years and no one's ever built anything that is just easy to send money to somebody else, right?
But why then? Why remittances are not yet a big use case?
Because I think people are easily chasing the money, right? People are chasing the exciting and extravagant things, and there's no excitement in that yet, because there hasn't been a view that could be either profitable in the short term. Most people are short term focused. You know, there's a social application on Avalanche called Stars Arena that's kind of blowing up over the past few days because it's just easy. It's just easy to use, and people can make money, and people can send money, or people could, you know, tip creators, etc. So we need, like, what I'm trying to say is we do the difficult things first. The easy things at the bottom that will bring a lot of people who then have money on chain, and then can start to, you know, provide liquidity and borrow and stuff. Or else, what are we really doing, right? Like, we do these big crazy things, and I think it's a testament to people first wanting to illustrate that the technology works. And I get that. And we always want to show that this chain works, or that chain works, or this application works, or this primitive works. But then we don't go back to the basics of how do you get there, right? How do you build up the necessary liquidity and users and scale to actually test the thing out? I don't know. I mean, that's just what I see, like, in the sense of, like, you know, you see these amazing things, but where does it really cross over into being a viable solution for more than the people that just exist on chain?
Okay, I think there are a lot of subjects here and things to be discussed, and I agree with all of the people before me. Basically, what I think is that, like, if I think about the first DeFi projects, first to me are the EMM and a stablecoin were a very simple and easy way to create a DeFi world. And new protocols now try exotic tokenomics, very difficult models that create, I mean, they can be only used by other people that are full-time working on this, or they are degens. And I think this is not good. ASP, for instance, we don't look at these kind of things as potential investment, because we think they're really niche stuff where the best degen, let's say, makes the money, and the others are losing the money. So I think we should play on the same level, on the same play field, and we should find products, or we should build products that work for the majority of the people, and they're simple enough that anybody can use them, if they're already crypto users. So crypto users should be easily comfortable to use good DeFi applications. On the other hand, to bring on board, let's say, new users, I'm thinking about like institutional users also. You need to add some layer of complexity. That is not the complexity of the protocol itself, but it's a complexity about securities, guarantees of the success of the things that are happening, and also I would say privacy, because everybody thinks that all the crypto guys wants to stay anonymous and they don't want to show their what they do. But if you go to institutional players, they are the more secretive people, and they are the ones that really don't want to. JP Morgan doesn't want anybody to know that they're playing with $1 billion in the crypto business and using DeFi stuff. So on one side, we have to be very, very simple, and I think, as you said, developers have kept on building products in this industry, and like in Web 2, that was at the beginning of Web 2. Only developers were building for developers, and if you were trying mail or whatever, you were trying to search the internet before the browser was for tech people. And but now we need the intervention of UX expert. We need a much stronger focus on that, and this is for the part, obviously, for the part that we're talking about, like getting everybody that uses crypto already, that gets used and confident with DeFi application. But then we have also the other part is that we have to become more professional in a way in order to figure out regulation, fees, privacy. There are all key things to bring, let's say, the big capital in the system, because the big capital is coming from institutional money. So that's my point, my belief at least.
Just something to add, to add to what you said, Fabio. I think this is kind of the jump that needs to be made, right? You said we need to get the crypto people to start to use, or you have to be a crypto user to get into DeFi. Well, that's already a very high barrier of entry. Like we are very elitist in the crypto world. For as much as we talk about financial inclusion and democratization and all these great things, set up a wallet, your wallet, any wallet is a chore for somebody. Seed phrases, there's too many difficulties, right? You shouldn't have to be a crypto user first or crypto aware first to use DeFi. We need to look at ways to create basic applications that allow users to do DeFi transactions without the crypto complexity and without being crypto native, perhaps. And then they get interested, and then they get into the more complicated things.
Totally agree, but I was thinking about the crypto users that are going on sex. You see, so these guys have not really maybe created a wallet yet.
Yeah, exactly.
Yeah.
So I agree with most of the stuff you guys said. Like John was focusing on, let's create simple apps that normal, like retail people or anybody can use. But honestly, without improving the infrastructure, there's no way that like normal person can use the app. So if I were to like spend my resources, I wouldn't spend them on like right now on retail focused apps, because as you just said, like setting up a wallet is a pain. People don't even know what gas is. Like talk to your mom about gas and having to pay for doing a transaction that can get stuck if you don't pay enough gas, and this can variably go up and down depending on the congestion of a system. This doesn't exist in Web 2. So I kind of disagree with like, let's build retail dApps now that people can use, because it's already too complex to do a transaction and to actually understand how to get a transaction from point A to point B. And then you have front running and MEV, which let's not talk about it, but basically like you sign a transaction from your wallet and it can get front run before it arrives to the second step. Leave aside regulations. So to be fair, like anybody who has been in the space for more than a few years saw that a year and a half ago, 2 years ago, we talked about scalability in white papers, but there was no way to even build an application that all the people in this room, in parallel could use. And now at least we built infrastructure for scaling, which means that a derivatives trading system can actually exist and be as performant, almost, as a centralized exchange, with the added benefit of being compatible with everything else, right? You set up one wallet, you can use bridges, and you can literally jump from one exchange to the other, buy here, sell there. This doesn't exist in Web 2. So I think like infrastructure is the key. Now abstract away the gas. People don't need to know about gas. They don't need to pay a variable amount per transaction. Maybe you make it a subscription model, like how you use Revolut and you pay a fixed fee. You can kind of pre-charge a gas amount, and then you can estimate how your users, how much they will spend, and charge them on a monthly basis. So I think like all of the base infrastructure has to be extremely simple, which we're getting there. But if the devs didn't focus on infrastructure and they focused on building like retail apps and games and stuff in the last 2 years, we would not be close to where we are today. And the last example I have is a retail app that is super simple and made for blockchain. So if people know what Pool Together is an on-chain lottery, very simple. People would deposit tokens inside, and these tokens are earning yield. For example, you could use stake TF, or you could invest in a liquidity pool and earn fees. And then the lottery contract on-chain decides the winner, right? Like where all these people in a room, we all deposit. After a week, the yield of the whole room automatically gets assigned from a random function to a person in the room. This is actually a real lottery, which is open source. You can read the contract and understand how the allocation of lottery works, which we have no idea how it works in off-chain. So that's a great application, but without actually being able to use it as a retail, meaning like easily connecting from a wallet. If you ever use the mobile wallet in crypto, like even Rainbow, and connect it to a dApp, it still sucks. And and transaction gets stuck, and most of the people in crypto I know still don't know how to properly unstuck and replace a transaction. And these are crypto people that work in the industry. So I'm saying like, let's fix the infrastructure. We're almost there. And in a year we start building a lot of retail apps.
Interesting. We talk a lot about wallet, actually. So I would like us to ask this kind of philosophical question, that is, should DeFi be and must be fully self-custodian or not? Maybe we can start from you, Ale.
No, because there's a lot of Twitter accounts that are getting SIM swapped, which means that you put your phone number as your second verification to access your Twitter account, right, in 2023. And people can actually add a two-factor authentication app, like Google Authenticator, whatever other authenticator you can use. And people don't do it in crypto. These are tech people, like whether they're founders or people that work in tech that use Twitter in general. So like, if in Web 2 people don't choose a very easy-to-use option for extra security, where they know that their phone number is a big security risk, they can basically get their account accessed and impersonated. How can we expect people to actually keep a 12 to 24 word keys safe, like for their whole life? Like, I don't think that's like possible. And honestly, when you talk also to crypto people about how they store their key, and like, it's very like, people have paper copies that they leave at their parents and then in their house, and then they put it maybe in a bank. That's an example. Because if 2 houses burn down, or you forget where you put the key, or you misspelled something, you go to the bank in a bank vault where, unless hell breaks loose, they have the third copy of your key. And legally, they cannot access it. So for some people, that's the way to go. Part of the recovery mechanism should be tied to an institution that you trust, because they are centralized businesses with laws, and you can always go and open a case against them. If your dog eats your private key at your parents' home, you cannot go anywhere. Like if you don't have a recovery key and you lost it, and you threw away that book, you wrote it on, whatever, you're screwed. Your money is stuck. So I have a lot, but I'll just let everybody else say.
Yeah, I think there are ways of improving what we're doing without really trusting institutions or like you were saying, or trying to change the way this world works. There are, I don't want to go into much details, but there are several ways of protecting your private keys that are different, and they don't necessarily require you to trust another organization. So I think this is the ethos of basically blockchain and DeFi, and I think we should all work towards making this part easy. and the 24 keywords easy, but not necessarily having like, so let's call it a custodian.
Why not have it as an option? Why not give it as an option for retail people?
Like Ledger.
I hate it. I build on smart contract wallets. Clearly, that's not my ethos. But like, why don't give it as an option like Ledger did? Like, why are people in the industry going against it? That's wrong. Like, we want.
I'm not sure that it's wrong. I mean, I think there are different opinions. There have been a big revolution about this.
Do people keep cash? Do people keep cash, or they actually open bank accounts and store their cash there?
Some of them they have cash under the mattress, and some of them they put it in bank. But at the end of the story, I wouldn't like to. I personally wouldn't like to see this system replicating itself over and over. But that's my opinion. It's not.
I mean, I don't think it's necessary to have self-custody. I personally do. We do. This is our ethos. It's the ethos of everybody in this room at some level or another. But let's go on the street and ask 100 people if that's their ethos, right? Ask the people who don't want to put money under their mattress, who want to put it at the bank. Or go ask people in, in Argentina or Lebanon or Turkey who put their money in the bank and then don't. So we can't push our ethos and what we see as the right way upon different people. Different people have different risk tolerances and different preferences. But I do think there should be a step one to getting a wallet that doesn't require any of this. That you never hear about it, you never see it. And maybe after a week or 2 or 3 or a month, that wallet gives you a little notification or something online that says, are you ready to take the next step to learn about security? And then they do something, and then again, right? So you get people in, again, just like I was talking about the applications being, at a high level and nothing simple. We're doing the same thing with wallets, right? Okay, give your mom a ledger and let her go set it up. Forget it. Like this is a disaster waiting to happen. Like this is what I mean by we are elitist. We want people to listen to what we say is the best way and the right way. Like there's a way to start. And people don't have to put everything into it on day one. But as they learn, we onboard more people, we teach them, they will start to take on this ethos themselves and grow. But if we keep it at the level that it's at right now, because this is the right way to do it, okay, then we're just not going to do what we're setting out to accomplish.
Yeah, I don't know if we have to keep repeating the same things here pretty much. People are dumb. I'm dumb. Do you know how many seed phrases I've lost, how many wallets I don't have access to? This is my job. I mean, I have a question for MVP, though. Can you see at all in that? You can? Okay. All right. Do you want this?
User choice at the end of the day. Obviously, true decentralization, like Fabio was talking about, is very hard. And I think it's become like nomenclature. Everything's DeFi, RWA is DeFi. Things that happen that end up on chain, can be considered DeFi. But in terms of true decentralization, you're right. Like it's user choice at the end, and retail. A lot of the hard technical work that's being done, is still trying to keep the ethos of decentralization. But at the end of the day, decentralization is like pregnancy. You're not somewhat pregnant. You're either truly decentralized or you're not. So it is kind of hard to call people that aren't being, fully custodianship and fully, decentralized. We can't then also include the people that are also using smart contract wallets that are being provided to them and stuff like that. So that's my take, but yeah, great conversation.
Gotcha, thank you. Yeah, I would like to discuss about this topic. So basically, we mentioned a few times real-world asset. So this idea of basically taking assets that are like traded off-chain and tokenized or issuing natively those assets on a blockchain. So it's coming from off-chain. And it's not the only off-chain word that we are seeing buzzing in the ecosystem lately. Without going too much into the specifics, there's Uniswap X that is adding some off-chain components to how, a DEX works, let's say. There's ZK coprocessor, like adding this idea of having another machine alongside the VM that is computing off-chain, some computation. So does DeFi require to be fully on-chain, or off-chain components that rely, for example, on faulty oracles, or like relying on off-chain components, is it still considered DeFi or not really? And what is really DeFi? It's just like the few primitives that we have built until now, so AMMs, maybe secured lending by Aave. Are those the only primitives in DeFi, or like now we accept basically defining DeFi as also like primitives that have off-chain components? So, but like maybe MVP, if you can start.
Yeah, so this is our moment, right? Getting off-chain assets on-chain, right? And we came up with the word, or the three letters RWA. So congrats to all of us for screwing up another thing that people have to learn about. But yeah, I think this is something that is going to happen gradually over time. Obviously, institutions will have to trust us as an industry. But when you do bring real-world assets on-chain, they are still using those core primitives that crypto people have done the hard work in providing. And so, yes, I will go ahead and call it DeFi. In the beginning, my initial definition was that financial functions, with the end result at least, ending on-chain in a trustless manner. Everyone can be transparent about what they're doing. Maybe JP Morgan will be doing stuff in the ZK core processors and trying to hide their wallets on chain. But yeah, I do believe we can talk about these real world functions of finance happening on chain and call them DeFi. But yeah, it's just us.
Yeah, I think we should be embracing them. I mean, it's the same question with everything. Do we want to be 100% decentralized, or do we want mass adoption? And I think these types of protocols are going to be great for onboarding institutional money and enterprises. So I think we should certainly be embracing them and considering them DeFi.
I think it has to be on-chain. I don't think there is a question there, right? Behind what layers or levels of potential privacy is one thing, but everything needs to be there, right? It needs to be on-chain. Off-chain assets are the goal to get on-chain. That's what doesn't have to be on-chain, obviously. And I think, RWAs is just another thing that, as a crypto community, we've completely destroyed with a terrible name. Because what's the opposite of a real-world asset? Is a fake world asset? I mean, it just makes everything we do sound fake and immature and childish and silly, right? So we're trying to move away from this term RWAs to on-chain assets, and it can be anything, right? Because when you bring it asset off-chain on-chain, then yeah, it should be. Every part of the mechanism of transacting it should be on-chain. I think at some level it'll move off, but I mean, it'll be abstracted away or transparent, but you can track that life cycle. You could see the history of what's happening, who's doing it, or potentially who's behind not who's behind the wallet that's doing it, but nothing is hidden, right? When you see an interest rate being generated, whatever, it's because that's what the code says it should be, and it's not some guy behind a desk changing the parameters to meet his quarterly quotas, right? Like, so does it have to be on-chain? Of course it does. The goal is to bring the assets that are not on-chain there. That's it.
Yeah, I mean, I agree. I would like to make a very simple example. I think stable coins are the first example of real world assets, dollars, put on chain. And so they're part of the DeFi. Actually, they're a critical part of the DeFi. So I would say yes.
Yeah, but they're just completely correlated to what's happening in the off-chain world. We haven't cracked yet the idea of having like a stable coin that is native from coming from just Web3 without any reliance to the old ecosystem or like to the old world.
I don't understand, sorry.
Yeah, stable coin is like tokenizing dollars on a public ledger. We have not cracked yet as a DeFi ecosystem the possibility to have a stable coin that is native and built without any reliance.
We had algorithmic stablecoins, and they all spectacularly failed. So until we're at a point.
Yeah, but I was saying that, but this is definitely then is going to be another thing. I personally believe there will be algorithmic stablecoin that succeed in the future, but what I'm saying is that now the pillars of the entire DeFi is based on real-world assets, dollars, that have been tokenized. So saying that the building that is tokenized is not part of DeFi, strange to me.
I think the question had like 2 steps. One was RWA, which everybody loved, and the second was about processing off-chain, right? And actually reading data from off-chain. So since you guys all love RWA, I'll speak about the rest. But I guess RWAs is like any synthetic asset in traditional finance, anything that is represented with a tradable instrument that actually has a commodity under, whether it's sugar or petrol or whatever you want, and then as a redeemable, that already is a synthetic asset, right? So we had stable coins, we have any synthetic asset like on top of stocks. As long as they trace the underlying, it's all Gucci, it's all nice. But when you start tokenizing real estate and tokenizing a car ownership and tokenizing stuff that have a lot of legal ramification under it, that's tricky. So we saw like under collateralized lending brought to DeFi, didn't work very well yet. Security tokens, since 2017, I see companies building them. The first was like TrueFi, and RWAs were called security tokens, if you will, right? And then it didn't work because tokenizing an apartment and all of the legal off-chain work that has to be verified and discussed cannot be done. But sorry, that was RWA. So it's very tricky, but it's definitely like synthetic assets in traditional finance, everybody trading futures of commodities and not actually sending grain and petrol around. We will be sending digital tokens that everybody can receive across the world and sell on another decentralized exchange or whatever. And processing of chain is oracles, as you said. Oracles are what built DeFi and kind of keep DeFi afloat. Most of the DeFi protocols read data from an oracle. An oracle is simply a price feed, right? And you cannot read prices from the US dollar on-chain without taking it from off-chain. It just doesn't work. So we need to live with oracles. And what's happening now is this whole intent-based, that's the new buzzword in DeFi, intent-based architecture like Uniswap X, which you mentioned, which simply means that we allow everybody, including market makers and traders off-chain and trading houses, to submit their solution to a problem the user has. So normally, I'll give you a quick example. I want to put my assets in a liquidity pool, maybe even on another chain, to earn some yield, or lend my assets on another chain. And normally, I would have to swap into the asset I need to provide, right? So it's an approval, a swap, then I need to bridge to the other chain, approval, bridge, then I need to approve on the end protocol, deposit, and then basically get the representing token of my deposit, right? These are like 6, 7 steps, 8 plus, depending on the bridge, 20 minutes, 30 minutes. And if you use an off-chain and intent-based approach like Uniswap X or CowSwap, if you ever use CowSwap, you say, hey, I have Ether and I want to get exposure to a convex pool on or a curve pool on Arbitrum. And actually, the market maker or the person that already has this exposure, or either they do the transaction for you, which is a complex transaction they just executed, or they give you the token, right? They exchange it for you, and maybe they even make a spread, which is how market maker they make their money. So this is a cool way to cut all the complexity for users, and it's cool because apart from on-chain liquidity, you can use off-chain liquidity. If you're a trading house that bought this token on SX at a discount or whatever, you can actually give it to the user, on-chain and solve the issue for them. So it's kind of the future, but we have to make sure that the off-chain component is governed by on-chain rules, because like Arbitrum or chains that have a single sequencer, like a single processing unit that reads and writes some data also off-chain, it has to be switchable off or changed by governance. It cannot be that an organization, a company can basically scam people by charging extra fees or not doing the right trade for them. It has to be enforced, and there's a lot of mechanisms that we cannot dive into, like slashing, like other things to punish people that act bad on-chain, even if they're doing stuff off-chain for you.
Gotcha, thank you. I saw that we are missing 5 minutes to the end of the panel. Maybe there's someone that has a question. So in the crowd, there's also some folks at Intesa. That is like a big bang in Italy. I don't know if you guys have any questions, tabs, things that you want to ask. If not,
Just digital assets, right? We've had analog assets, we've had electronic assets, just call them digital assets. I don't think it's I don't think it's a solution name, on-chain assets. I do think it's a better name than RWAs, but I think we as an industry always like to create names because it makes us feel like we're doing something special, right? Like we're different, it's better. But yeah, I mean, look, I prefer to just call everything a digital asset. But wrapped is a good way. But if you explain wrapped to common people, it's a wrapped asset. They're not going to wrap their head around it, right? So we just need something.
Think about chicken wrapper.
Yeah. But also like AI, like take a comparative to AI, they build terms, they make stuff that don't make sense. And I mean, it's just to take another sector that is going up fast, right? LLMs and like, and the likes and whatever.
Cool. Any other questions? Someone else? Oh.
Yeah, so I work at a bank, and I would like to tokenize a lot of the stuff we do, but like, if we want to tokenize something today, tokenization is not really a feature, it's a bug, because like after I tokenize a bond, I have no one to trade it with. I need to pick up the phone, call a counterparty, try to find someone, and then maybe I can sell it later. So if I keep it not tokenized, I can just trade it on any venue. So it's actually worse. The tokenized asset is worse than the off-chain asset. So how do we make it better? Like, what is a real solution today for banks who want to tokenize stuff that provide the privacy that you talked about, that provides the all the cool things that tokenization can bring? Because just today, I do not see it.
You go first.
I mean, so I agree with you, right? Up until this point, putting something on chain just made it that much more difficult. You're adding another layer of complexity to something that you already do on a daily basis. So what the hell's the point, right? Like, why do you need to go through this? I think at a level, tokenization is going to help with distribution overall. But we talked about this earlier today, and I wasn't going to talk about specific Avalanche functions, but we have something called the Spruce testnet I mentioned earlier. It's asset managers, banks that are participating right now on chain because they know that every other counterparty that's within that permission chain running on a public network has been cleared and verified, et cetera, et cetera. So instead of you picking up the phone and calling a counterparty, you can just put that asset up and then 10, 15, 20, 100, 200, 500 participants in the future who are in that pool with you or on that chain with you can naturally execute that transaction on their own. So it helps on the distribution side. But up until this point, yes, if you have to tokenize something, you have to go through the process of tokenizing it. You need to make sure it's compliant. You need to find someone else who has the ability to take that asset, and their compliance accepts it. It's a disaster. It's a complete disaster. So the infrastructure up until this point does not exist, or at least does not exist in a way that a majority or even a minority of participants in the market can do. So we need to provide better solutions and better technological solutions. I think we're giving an idea to the market. I don't know if it'll work. I hope it will. But we need to strive to create better solutions and infrastructure.
No, I just wanted to add that history repeats, right? I mean, would we ever thought in the past that Amazon, with this little bookstore, could create such a marketplace, or eBay should create such a marketplace? And this is a matter of creating marketplace. Creating marketplaces, I mean, I've created personally a couple. Is like something that is a 10 years long story. It's very, very difficult. But once you have the marketplace, the value of the marketplace is enormous. And then you have to put together a lot of buyers and a lot of sellers together. Today, we're definitely not there. Technology and infrastructure probably is not there, but I think we'll get there. And the advantages are enormous, as you said, because at the end of the story is just you're tokenizing everything. We are making everything more global, more distributed. And there are companies actually that are working very hard on that, both in Europe and in the US. I mean, since 2017, they've not get there yet, but we'll get there, I think. So,
touching regulation, eventually they will kind of look alike, right? Because the asset that you're trying to propose to a buyer is essentially the same, right? It's a tokenized version. Once we get to the canon part of it, it's going to get fixed. You mentioned liquidity at the end, which it's like you're asking for liquidity in a system that hasn't even been built yet. So I don't even think that's another thing to like settle, like discuss a lot on, because liquidity comes only when there's a marketplace which functions and people can actually use. So liquidity, let's set it aside. It comes with the right buying terms, the fees, right? Like people use Revolut for FX swaps instead of banks because banks charge like crazy fees. Like we use Signum as a crypto company, and I pay $80 to $100 for a foreign SWIFT transfer. That's absolutely nuts. That's stupid. And TransferWise exists as a business because they found a way to like transact money cross-border in an easier and cheaper way, and people use TransferWise. Not, well, they use banks, but like less when you know how to look at alternatives. So regulation, put them on the playing field in a couple of years or maybe 5, I don't know. And now, what is crypto good for, and blockchains, that it proved at a technological level by all this degen trading, this DEXs, liquidity, Uniswap, that you can trustlessly trade with somebody else, a counterparty, without needing to like trust that person with an escrow contract, with a third party in the middle. And you know that if you list something and it gets a bid from the other side, the two collaterals will be exchanged no matter what, right? It's proven. And if they're not exchanged correctly, it means that the whole blockchain failed, and the validators, which cannot happen, thankfully. And nothing like this exists. Like I'm literally trusting Swift that they are going to deduct the right balance from my account and input it on the other side. And that historically didn't work very well, even though it's the best option we have today. So I'm trying to say, I don't know if that was a good answer, but I'm trying to say technology for crypto for matching P2P, it's the best we have in the world. And I have no comparison. Like I think torrents came close, but torrents at the end are crypto without a currency. If you ever use Tor or LimeWire in your life, that's pretty much the same. I'm downloading a file from somebody without trusting them, and they don't need to trust me that we're not going to abuse each other. So that's what crypto provides you. And then you have to actually put up a marketplace with a very nice UX for institutions to onboard and say, okay, before you were trading bonds on this exchange, you were buying US stock on another exchange. Like I have Interactive Broker, I have the Giro, I have my bank, I have Revolut, whatever, and each of them list different instruments with different liquidity and whatsoever. In crypto will be worldwide with the same liquidity when you have one platform that wins it all. And that's why Uniswap actually works. People use Uniswap because it has the deepest liquidity on any token that can be listed in a fraction of the time it took years ago when it was first announced. And it's going to be like that in a few years for tokenizing stuff.
Gotcha. Yeah, we're going over maybe like just one or two questions. Yeah, please.
Yeah, I was just going to build off the prior question. If that is the prevailing view amongst traditional finance, which it seems like it is, where, okay, yeah, you've got all this nice technology, but from a compliance perspective, it's difficult, and if we tokenize it, what can we do with it? Then surely the opportunity is in markets where they don't have that view. Let's say in Africa, they're loading SIMs and they're transferring credit around. In Latin America, similar issue. There's much more value and it's much more productive to focus on those markets because they're going to hop technologies rather than focus on, let's say, Italian banks where they already have systems which work. They're not great, and maybe settlement takes a few days, but they're happy with them and they're happy with the risks. They might end up coming afterwards, plugging in afterwards, once it's already been proven in jurisdictions where they literally don't have systems which work.
Kinda. I'll just give a simple example in Web 2, like Spotify. When Spotify was being built, everybody was onto their asses, right? Like regulatory, because obviously you couldn't like license music and just stream it for a fee without buying the rights. Like that didn't exist. And the only way that Spotify, which was music torrenting, literally what we were talking about before, the only way it came to fame is because consumers like this model, right? They like the idea of paying a subscription and not buying every single track that they need to listen or whatever, because that doesn't make any sense now when you think about it. But it was like that. You used to buy CDs of artists to listen to 2 songs, and you used to pay 15 euros or 10 euros for each CD. That doesn't exist. So consumer will build the demand, which Africa is a good example. I spend a lot of time in India. I always make this example. India has a government payment network called UPI. If you Google it, UPI. and it has 90% penetration of mobile phones in India. We're talking about like, you know, a lot of people, if you check it up, literally. And when I tried it, it's like, wow, it's literally what crypto can enable. How they did it, simple. Every bank, by government mandated, had to onboard onto this transfer standard, which is instant. It doesn't require a bank account, and it's linked with the e-banking apps or payment apps like PayPal, Revolut, the like, that India has. Now, if you're a street vendor and you're selling a juice for 20 cents in India, there's a QR code that you can pay from any app and you can receive money. You don't need to have a bank. Once you have the, why do you need a bank? You have an actual digital account where you can receive money from anybody and you can spend it to do anything, pay groceries, get a cab on Uber. That's how India works today, and it's a third world country. Italy, like, we're no way close to that. There's like Satispay and all these separate apps. PayPal sucks, they have really bad fees. So consumer demand from third world markets comes. Now, India did it at a government level, authoritarian, they have the chops. How do we get it into crypto, not traditional banks? Simple. Well, Forex, right? Because there's a lot of controls on Forex and actual fees that are unnecessary for trading Forex in India. And the second is cross-border. If I'm Indian and I want to send money outside, it's an absolute nightmare. And this is why I'm paying $100 for a transfer to pay them in rupees or dollars. And so that's what crypto is amazing at. So we're going to get there.
Okay. I think we can close. We are over. If you have any other questions, feel free to ask outside. Just want to thank you, everybody. This is the last speech of this panel and of this room and of these hours on today's. Thank you so much for coming, and thank you so much for the support to ETHMilan. And have fun now at the aperitivo.
Yes.
Thank you.